Who is to blame for the housing crisis in Canada? The housing crisis in Canada has become one of the most pressing social and economic issues in the country. With home prices skyrocketing beyond the reach of average Canadians and rental costs soaring in urban centers, the question of who is responsible has sparked widespread debate. The crisis is not the result of a single factor, but rather a culmination of missteps by various stakeholders, including federal and provincial governments, municipal authorities, real estate investors, and even financial institutions. Each group bears a share of the blame, though government inaction and policy failures stand out as the primary contributors. 1. Government policies and inaction. At the forefront of responsibility is the Canadian government at all levels. A critical issue has been the chronic undersupply of housing. According to a 2023 report by the Canada Mortgage and Housing Corporation, Canada needs to build an additional 3.5 million homes by 2030 to restore housing affordability. Yet housing starts have consistently lagged far behind this target due to restrictive zoning laws, lengthy approval processes, and bureaucratic red tape, particularly at the municipal level. Moreover, for decades, federal and provincial governments have reduced their investment in affordable and social housing. Since the 1990s, the federal government cut back significantly on funding for public housing projects, shifting responsibility to provinces and municipalities, many of which lack the resources or political will to respond adequately. 2. Real estate speculation and investor activity. Real estate speculation and investor-driven demand have also exacerbated the crisis. In 2020, investors accounted for nearly 20% of home purchases in Canada. In Toronto and Vancouver, two of the country's most unaffordable cities, this figure has been even higher. Investor activity drives up prices by outbidding prospective homeowners and often leaving properties vacant to wait for price appreciation, reducing available supply. Foreign investment has been another controversial factor, with critics arguing that it inflated prices and worsened local affordability. Although the federal government introduced a 2-year ban on foreign home purchases beginning in 2023, the measure may have come too late to curb the damage done. 3. Low interest rates and financial institutions. The Bank of Canada's historically low interest rates during the 2010s and early 2020s made borrowing easier, fueling demand and pushing prices higher. While these rates were intended to support economic growth, they also incentivized speculation and over-leveraging. Mortgage lending practices, particularly loans with minimal down payments and extended amortization periods, allowed buyers to take on more debt than they could reasonably sustain, further inflating prices. 4. Municipal zoning and NIMBYism. Municipal zoning laws have severely restricted the development of dense, multifamily housing. Most urban land is zoned exclusively for single-family homes, limiting the ability to build more affordable options like duplexes, triplexes, or low-rise apartments. Resistance from local residents, often referred to as "not in my backyard" NIMBY attitudes, has also blocked or delayed development proposals, particularly in wealthier neighborhoods. Conclusion: Canada's housing crisis is the result of a complex web of interconnected failures. While investors, financial institutions, and NIMBY residents all share some responsibility, the greatest blame lies with the layers of government that failed to plan for growth, regulate speculation, and build sufficient housing supply. Without coordinated and bold action, including zoning reform, investment in affordable housing, and measures to curb speculative demand, Canada risks deepening inequality and social unrest. The crisis did not emerge overnight, and resolving it will require long-term, sustained effort across all sectors of society.